All right, hey there, everybody. Welcome back. My name is Christopher Inks, and I'm with Texas West Capital. And it is Monday, March 16th, 2021, just a few minutes after 11 a.m. Central Standard Time here in beautiful Boerne, Texas, just north of San Antonio. Beautiful hill country out here, though we are at risk for some severe weather today. But that looks like that'll be later on tonight, so... Anyway, hopefully y'all are doing well. Who's checking in here already? Let's see here. Mark. Man, Mark's making a habit of being up top there, checking in. Good to see you, Mark. Ari is here as well. Hank is here. Hank says, so wherever you go, there you are, and nothing could be more true today, right? If you're allowed to go anywhere, depending on where you're located. Anyway, hey there, Golddocker. Good to see you, buddy. Been a while since I've seen you check in there. Excuse me. Let me see here. Luca, what's going on? Let me see here. What's the bold statement, man? About Bitcoin? No, I think it's still got further to go. It doesn't mean it's crashing or anything. But I think, minimum, it's just a wave A. It looks like it's 5 waves down. So we'll take a look at that today. As always. Let me see here. Here, Crypto Mowgli. Or was that the Hank statement maybe that was the bold statement? Wherever you go, there you are. Let me see here. Nick Zach, what's up, buddy? Good to see you checking in, man. Nevlusian, what's up, buddy? Tell you, Rudder. Man, some of my favorite people checking in here as always. Josh, good morning, sir. Good to see you. Oh, is it Tuesday, Mark? It is Tuesday, isn't it? Thank you. All right, so that's pretty much how my week is going. Thank you. I appreciate that, man. Yeah, and so it's Tuesday, the 16th of March, 2021. I'm still here, though, and you're still where you are, so at least we've got that down, right? Scott, good to see you, man. Yeah, guys, hit the like button. If you get a chance, wherever you happen to be watching this, I'd appreciate it. Let me see here. I'm Deuce. What's going on, man? Can't wait to hear me say the words expanded flat. Oh, I'm going to say that, but I might also say triangle. I might also say just zigzag. We'll take a look. It's too early to call what it's all about, but, price did kind of do what we were talking about last week, so... definitely the expanded flat is still a possibility. So we'll be checking that out. Hey there, Ross Mark. Always good to see you, man. Let me see here. Anyway, so good to see y'all checking in there, man. As always, guys, you can join us here at howtotradetowin.com. We'd love to have you there. I will update this at some point. At one point, I'll actually get around to this. Man, I've got to go and see how many hours we've got of educational content now. It's well over 60 hours at this point. For the last, probably 3 weeks or so, I guess. If you're Tier 3, we do a live stream just for our Tier 3 members every Wednesday, where we go over different tips, tricks, and techniques to kind of get you out there and trading, even if you don't really know what you're doing to begin with. Just something that gives you solid rules and things you can use. So you're not just going out there and guessing where your targets are and stop losses and all that kind of stuff goes. But the last 3 weeks, we've been kind of really studying Elliott Wave. So, we're going to continue that this week as well. And so whenever you join, guys, you get all 5 months or whatever it is we've done now. Maybe it's 6 months. I don't even know how many months we've been doing this now. Seems like we just started yesterday with the Tier 3 thing, the Tier 3 weekly stream. But, yeah. So we've got a lot of content there as well. I've had some great suggestions. One thing we do at TWC, man, is we're always open to suggestions, and we don't always get to implement all of them, but we definitely try. And we've had a few more good suggestions here lately. So I think we'll probably be implementing a few of them. So if you're on TWC there, you can look over in the suggestions channel and you'll see what people have been suggesting lately. Again, guys, if you are in, we can't promise that we'll be able to implement all the suggestions that you give, but those of you that have been around, which, generally, if you're a TWC member, you stick around over a year, you've seen that we definitely go well beyond probably anybody else out there in implementing all these suggestions and whatnot. My biggest constraint is time, so I try and work it out so that I've got time to do it. I don't want to do something if I don't have the time to do it. But we're definitely looking at that. We'll probably be adding, I think we'll probably be adding a few more to at least the Tier 3 daily updates for the assets and instruments that we update. I think we're going to add in bonds in there. That was a good suggestion since we talk about it so much, and other things there with the macro side of it. I think we may add to our Forex pairs that we track on a daily basis. I think we may add the Great British Pound against the USD. Right now, we already track Euro against the USD. We track USD CAD, USD Yen, and see, what am I missing there? USD CAD, USD Yen, Euro USD. Oh, the Australian dollar against the USD. So I think we'll add the Great British Pound in there as well, the cable versus the buck. And then I think we've had a request for it, and I'm just trying to figure it out. I think we might add DOT and ADA to the updates as well. I just got to make sure I can do all this with everything else that we do. I would hate to say that we're definitely going to do it and then not. But things like bonds or whatever, we may update, just a few times a week, kind of like what we do with the crypto indexes, which is something new that we've started doing for Tier 3. So if you don't know, right now for Tier 3, we also have, let me see, I'm finding here, the 1, 2, 3, 4, the 5 crypto indexes: Alt Perp, DeFi Perp, Exchange Perp, Mid Perp, and Shit Perp. And so we do those twice a week. We update those. So yeah, just always trying to add more, always trying to do more in there. Hey there, Dogan, good to see you, man. Spiral Architects in here. Train Crypto, what's up, man? Let me see. Let me see here. Yeah, Hank, it's a little bit slower trying to add stuff in because we already do something like 20 assets daily, intraday, a couple times a day there, assets and instruments there. And then, of course, we do the 4 indexes, and then that's with everything else that we do. So, we have to add things in as I can actually do it, since I'm the one that does it. So, yeah. Yeah, 51 ETH, what's going on, man? Yeah, definitely looking forward to probably sticking DOT in there. DOT seems like it's got a lot of oomph behind it. People kind of following in with it. It's been suggested, so I think we'll probably do that. Hey, what's going on? Asim Risk, good to see you, man. Hey, but anyway, hey, listen, guys, if you're new, so last week what I did was I actually put out, there were only 4 coupons available, but you were able to get 6 months or 12 months of Tier 3 at stupid low prices. I'm going to go ahead and do that right here. If you're new, it only works if you're new, okay, guys? But if you haven't been with us and you're new, the system will let you do it. Put in this coupon code and you can get Tier 3. This only works for the annual, for the Tier 3 annual. But this code, with the discount that you already get by purchasing an annual, with this code, is an extra 35% off. And it gets you, I think, around an average of about $84 a month for our Tier 3. And if you're just buying it monthly, it's $199 a month. So if you were able to, we've only got 3 of these now. First come, first serve. But if you want to use this coupon code right here, let me see here. Coupon code for 1 annual Tier 3 membership subscription. Only 3 coupons available. There we go. There you go. So you can use that one right there and jump on in it, and you'll be able to get in with us for a year. Why do we give discounts for a quarter? If you want to do it quarterly, biannually, or annually, because as I've talked about for years since we've been doing this, trading is not something that you learn overnight. You can first you have to learn all how it works and whatever, depending on what you want to learn, but then you actually have to apply it, and that application takes a while. Especially if you're new, it takes you a while to understand how the markets move and how they work and all these things. And so if you're willing to, be serious about putting in that effort, we're willing to give you a pretty big discount for staying in longer. So that's what we do there. But that coupon code, like I said, it's available to the first 3 people that use it. You have to be a new user, a new member, to Texas West Capital with the site there. But if you type that in there, you can get the annual package there. It averages out to around $84 a month with it. So, but like I said, once those 3 are gone, they're gone. So that's what it is. Anyway, so let me go ahead and jump on here. And by the way, I'll be posting that on Twitter here and everything, after we're done with this stream here. So if you're new, jump on it if you're interested. Let me see here. There we go. So here's what we're looking at. Generally, I had a basic 5 cal kind of working out last night. And prior to that, and we kind of got right around a little bit below, but right around the area where I was kind of looking at for us to get this target here. Overnight, let me see here. Yeah, this has been overnight here. We've gotten this move up, which could be an A and then expanded flat, a B and then a C, or it could be, a 1, 2, 3, 4, and 5. So if it gets above this swing high here, this 56,444, that's going to say this is probably, let me see here, 1, 2, 3, 4, probably right around there. Oh, let me change it. What are we using here? Okay, there we go. Subminuet, and we'll just make this like a different color. We'll make it like a purple. And so we'd probably be looking at a 5 to get you up here around the pivot, and then an ABC back, and then actually let me go ahead and take that down a notch because of that, because then we'd be looking again. This would be A, then you get your B, and then you get your C up here. And we'll go ahead and make that the same color so it all fits. So this is what I'm kind of looking at here. If we get this rejection around where we're at, then this suggests a short wave 2 or wave B here at about the 38.2 retracement. And we'd be looking for then, wave 3 or wave C. If it goes up above this swing high that I just mentioned here, then that suggests we've got a 1, 2, 3, 4, 5, excuse me, which should just give us an A, and then we'll have a B with 3 down, and then 5 up for C, which will probably take us at least to the 70.5 here, but that high volume node is right here around that 78.6. So I think it would probably take us closer to this up here. And so again, this then becomes a 1, 2, and then a 3, or an A, B, and a C. So that's kind of what I'm looking for now. It's kind of this range. You know how I usually do this. Draw this box here. And there's the range. And so if we get the breakout through the top, it means the purple count's probably in. If we instead get a reversal here and head down, it means this red count kind of remains relevant here. And the red count says, okay, well, we've got a 1 and a short 2, or an A and a short B. And then we've got a 1, 2, and that would give us a 3 down here around 52,865 minimum on that. And I really think that's pretty much as easy as it is. It's kind of where we're at as far as all this goes. As I said, we got almost a 14% decline here from the swing high up here 3 days ago. And if you were watching last week, then we were already talking about this. So let me kind of zoom out here a bit. We were talking about the possibility of this being here, an A, B, C, A, B, C. And then, you'd have basically your 1, 2, 3, 4, 5 for your expanded flat type idea here. But this still has a way to go. So it doesn't have to be. Man, I don't know. When I look at it again, it's always about how does wave 2 and wave 4 look. And so if this is a wave 2 here, again, expanded flat idea. So 1, 2. Your 4 anywhere along here is a lot smaller, a lot more minuscule than what you have here. And it always gets a bit iffy when you don't have that similarity between them, when you have a really large one and a very small one. So, again, could potentially be 5 up here, but I think right now it leans more toward, an A and a B and a C here. But if it doesn't, that's okay. Again, even if it does, here's the thing. Even if it does, this could be A, B, C down. Remember, anytime you have basically an ABC followed by an ABC, then that means you've got probably a flat or a triangle. Now, in this case, the triangle would have to be running. And I'm not saying it can't, but remember, a running triangle is much more rare. So what we would expect to then see is you've got this, this 1 and then 2 and probably a 3 down toward this 48,000 area, and then 3 up and then 3 down like this probably. So at that point you have, this is a 3 and then this is a triangle for a large 4 here. B, C, D, E. And so that's still a possibility as well. Until we get beyond 3 waves down, right now I think you're looking at a triangle, or again, this could be 3, this could be 4, and this could be 1 of 5 here. So this is a 1 and then this is a 2. If it's this latter one, where this is a subwave 1 here, then we'd normally be looking for price to get down around here anyway, the 61.8 to the 70.5. So the 3 down would still fit in with that. What I'm trying to explain to you guys is, a lot of people, they get bent out of shape about Elliott Wave because it doesn't go exactly where they think it has to go in their mind. But the big benefit to Elliott Wave are the validation and invalidation levels. And so it doesn't matter which of these plays out right now because they all lead down. So you can ride these all down, and as you get down here, then you can, as it's playing out, you can figure out, okay, is it more likely one than the other? But you don't have to know which, if one of those 3 is the correct interpretation of what's going on here, you don't have to know which one is correct right now. You don't have to know which one's correct up here. You just had to know that all 3 lead down, potentially toward this, this 50,150 to 74,085. If I had to choose here, I think it's probably hitting that 70.5 level because that's actually, the 61.8 is this low volume node right here in between these higher volume nodes. It's not a good place usually for reversal. Your 70.5 kind of gets you right on the high volume node here. So to me, if it's just going to be done after 3 here, that's likely to me where it goes. So, that's kind of just where we're at that point now. Let me see here. Turn off everything. There we go. Edward Park, what's going on, buddy? Hey, I appreciate it. Thank you, man. Sometimes we get them right? The other thing you need to know, guys, if you are a trader, is that you are going, no matter how long you do this, especially if you try to do the shorter time frames, you're likely going to be wrong more than you're going to be right. But again, that's where Elliott Wave kind of shows its what it's worth there. Because one of the hardest things for most traders in general to figure out is, where do I put my stop loss? Where do I find my targets? And Elliott Wave gives you a rules-based approach to that. Elliott Wave isn't difficult to learn. It's actually pretty easy to learn. It's a little bit more difficult to implement at first. You have to get used to it. You have to practice. The problem with most traders, especially newer traders, is, and this was really big during the last couple of quarters of 2017. Everybody was jumping on something different every week. One weekend it was ICT, the next weekend it was Wyckoff, the next week it was Elliott Wave, the next week was, classical charting patterns or whatever. But, you can't do something, especially, just in life, but especially in trading, you can't just do it a few times and half-ass it when you do it and then go, oh, it doesn't work. It does indeed work. But you have to get used to it. You have to practice with it. You have to understand how to apply it. You have to learn it properly. That's the other big thing. A lot of times people try and learn things, just from somebody, showing them some charts online. But, if you don't know, when it comes to Elliott Wave, if you don't know that it has rules and it has guidelines, if you don't know that there's a difference between rules and guidelines, if you don't know that rules absolutely must be adhered to and guidelines are usually what happens. If you don't understand these things, then it's always going to look like Elliott Wave doesn't work to you. Rules include things like wave 2 cannot drop below wave 1. Wave 3 cannot be the shortest of waves 1, 3, and 5. Wave 4 cannot impede back on wave 2. Wave 4 should not or cannot go below wave 2. Wave 4 cannot go into wave 1 unless it's a leading diagonal or an ending diagonal. And very occasionally, you can have a wave 1 wick up and a wave 4 overlap wick to wick overlap, but that's usually in a very illiquid environment. But these are, rules, or so to speak. The guideline is wave 4 can't dip into wave 1. The rule is wave 4 can only dip into wave 1 during, like I said, a leading diagonal or an ending diagonal. If you don't know that an ending diagonal is, the rule is that it has to be 5 ABC waves. So waves 1, 2, 3, 4, 5 all have to be ABC. They all have to be corrective. But a leading diagonal, they can all be corrective, or they can be the usual 5, 3, 5, 3, 5. These are the things, to be able to know these. Guidelines are things like wave 3 usually is 1.618 times the length of wave 1. Wave 2 is usually at least 50%, generally 61.8 to 70.5% of wave 1. But wave 2 is valid as long as it does not decline below wave 1. We know that wave 4 usually targets 38.6% of wave 3. Sometimes it'll go to 50%. Those are the guidelines. However, because they're guidelines, it doesn't have to reverse there. It can continue to decline as long as it doesn't, go into wave 1, unless it's leading or ending diagonal. We know that wave 5 generally is 61.8 times the length of wave 3. So we know these things. We know that a rule is that triangles cannot be found in, wave 2s are not triangles. Wave 4s are triangles. Wave Bs are triangles. Wave Xs are triangles. So I guess, I bring this up because I had somebody who is being difficult there on Twitter, trying to say, why do you teach Elliott Wave, which is so difficult to learn? It's not difficult. It just has rules and guidelines that you need to learn. It's like any game that you seek to play. You want to play Monopoly, you got to learn the rules, right? You want to play Uno, you got to learn the rules. And so I guess I put that out there because a lot of y'all want to learn Elliott Wave, and I want to let you know that it's not difficult to learn. It just takes time. That's all. It takes practice. It takes learning it correctly. And the big benefit of why we do it the way we do and why we provide setups and why we provide Discord is so that you can see these reasonings and these things as it happens. So you'll see, okay, so if I go in there and put a setup, you can, I'll explain it. I'll say, well, this reached this area, so it should now go here. And this is what we're looking for. This is the validation point. If it goes beyond here, then we're likely on the right case here. If it goes the other way, then it's invalidated. And so what you get to see with us that you don't get to see with a lot of people is that you get to see it actually applied. And that's one of the hardest things, for new traders. You come out here and you learn, here are the rules, here are the guidelines and how to do things. But then you go to apply it and you're like, I'm so lost. What do I do? Nah, man, tier 3 especially. You get to see it. You get chart critiques. You could say, listen, I'm looking at this. Am I doing it right? What am I doing wrong? What hints can you help me with? And I think that's a big, the reason why we do things the way we do is because of that there. And I think that kind of sets us apart, for most people out there. No, you don't have to have some degree in teaching people how to do something in order to do something either. I don't know, guys. Some of the things people say are really funny out there, but at the end of the day, the important thing for me is that if you're with us, you're serious about learning and you're actually putting forth the effort. You have to do it, guys. I can't do it for you. Nobody else out there can do it for you. Whether you come to us or you pay somebody else $2,000 or $4,000 or something, for a one-time course or, whatever it is to do it, nobody can do it for you. That's the big thing. So I want to kind of allay some of those thoughts that you may have as a new trader when you first come in. Because you come into crypto, let's face it, you're in crypto because it looks easy, right? Huge moves. Everybody talks about it. It's so easy to make money, right? But yet most of the people are not making money, and they're not making it consistently. Or they get lucky one time and they make a good amount of money and then they give it all back. There is little going on in terms of new traders in crypto that hasn't been going on for decades in Forex. And again, that was where I was in strongly before I started putting some into crypto. So, I know the people out there trying to sell you the same stuff, the same get rich quick overnight scams, because that's what you want to hear. The only reason they continue to sell it is because you want to hear that. So I want you guys to recognize that, so that way you're paying attention to what's actually being sold to you and what you're actually buying. Okay? Let me see here. Let me kind of catch up with you guys here. Let me see here. Josh Johnson, what's up, man? He says, bearish divergence on the weekly. Yeah, I believe that's been playing out, this little bit here. So we kind of talked about this last time, and I think the time before, and we'll talk about it again here. So let me get this back over here. So you have this bearish divergence here from beginning of January here till mid-February, right? Between these two peaks. And then between these two troughs, you have hidden bullish divergence. Okay? So it pops up again. Now you have bearish divergence once more. Now the thing is, if we drop on down, the low here is 67.8. So if the weekly closes below 67.8 and price closes the week above 43,016, that'll create, again, more hidden bullish divergence. If price was to drop down, though, below that $43,016, it would invalidate that hidden bullish divergence there. So what happens here is, usually when you see this movement from bearish divergence to hidden bullish divergence to bearish divergence, and getting smaller with the movements here, that's usually indicative of a top incoming. All right? Now, that could just be, you could see some bit of ascending wedge here, ending diagonal printing as it goes up higher here. So maybe from, depending on how you count this here, maybe you've got a 1, 2 and then a 1, 2 here. So 1, 2, 1, 2, 3, 4. I mean, that could be a 5 there. You could have a 1, 2, 3, 4, 5, which gives you a 1, 2, 3, 4, 1, 2, 3, 4, 5 as an ending diagonal maybe. So as I talked about earlier, the possibility that it's just an ABC down and then higher up, this could be, again, a 1, 2, 3, 4 with the ABC down, and then 5 more for a 5 and gives you just that that ending diagonal there. Let me get rid of some of this for a minute. Sorry about that. Let's see. Just kind of, sorry about this, guys. Again, I do apologize. I don't zoom out to the weekly all the time when I add new stuff in there. But yeah, so, again, depending on how you want to count it all going up and through there, that could be what's going on there, which is why you're getting this bearish divergence, hidden bullish divergence, bearish divergence, hidden bullish divergence, and whatnot as it plays out there. So we'll have to see how we get us pullback. Right now, like I said, minimum, I think we've got an ABC still going on toward, that 48, 50,000 kind of area there. So just make sure that you're kind of watching that as it plays out there. Don't get ahead of yourself. Another big thing that traders, especially newer traders, tend to do is the minute something starts to look like what they want it to look like, they jump in. They don't wait for confirmations. They don't check anything like that. And that usually ends to loss. And the sad thing is, many times when you do that, listen, guys, most of y'all are going to find most of the trends often, but you're going to jump in too early with too large a position size and too short of a stop loss. So you're going to be like, oh, it's going to continue in that trend, and you go, let's say you think the trend's up, so you go long, but it's going to pull back further than what you have room for because your position size is too large. This is why I keep telling you guys, risk management is the most important thing that you will do every day as a trader. It deserves most of your time. Not Elliott Wave or Wyckoff or supply and demand or pivots or anything like that. Your risk management deserves most of your time because that's where you make your money. I promise you that's where you make your money. But again, this is something you don't hear anywhere else. Everybody wants to sell you on their little system that works. All of these things work, guys. Elliott Wave, Wyckoff, supply and demand structures like I do them, supply and demand like, it's other, like it's taught elsewhere. Pivots, I mean, all these things, classical charting patterns, they all basically take you to the same targets, guys. They do. So it's not that one system is inherently better than another. It's just that your risk management is what determines if you're successful or not. And to be a trader is not to get some big $20,000, $50,000 run. To be a good trader is to consistently lock in profits. And that doesn't mean you're going to lock in profits every time. Sometimes you're going to be wrong. More times than you probably like. More times than you're comfortable with at first. But you have to get comfortable with being wrong. That doesn't mean that you be wrong and you lose 30% in a trade. That means you employ good risk management so that way when you are wrong, it's no big deal. We often talk about 1% and 2% rules, right? And how important they are to trading, but they are most significantly important to new traders. Once you're in for a while, once you've been in a few years, because it really does take, on average, it takes 3 to 5 years for a trader to become comfortable and consistently profitable in a market. Okay? Yeah. Now, don't let that dissuade you. It doesn't. The goal is to stay liquid while you're learning, which, again, goes back to why risk management is so important, especially the way we teach it, because you're going to be wrong at first, and you're going to be wrong a lot. The goal is to stay liquid, so that way when you're right, you can really make some money, excuse me, being correct. But when you're wrong, you're not going to lose your shirt, and you're going to be out. Remember, over 95% of traders are out in the first 90 days, guys. Excuse me here. Getting a little excited talking to y'all. Oh, man. Orange Gatorade, man. That's where it's at. If you don't have some sweet tea. But yeah, so keep these things in mind, guys. I know you came here because you think it's easy. You're going to get rich overnight and whatnot. And you may get lucky on occasion. But it's worse if you get lucky, because then how do you hold on to that money? Right? How do you hold on to that money? Most traders don't. Like I said, if they get lucky, they'll make that money, right? And then they'll end up giving it right back. It's like a casino. The casino knows. Why do you think when you're at a casino, why do you think that they give you, they comp you when you do really well? They comp you with a gorgeous room, free show tickets, free drinks and stuff, because they want you to stay and continue playing, because they know the longer you play, the more the odds are in their favor. How many of y'all go and if you made $10,000 on a trade, you'd leave? You wouldn't. You get all excited thinking you know what you're doing and go back and do it again. And in trading, often you were just lucky. And so you end up giving all your money back. Once you've been in it for, and some people it's a little bit shorter, some people a little bit longer time. But, in general, like I said, 3 to 5 years is what they found it usually takes for people to become comfortable enough to be consistently profitable as traders. After that point, you can work with your risk management. You can risk a bit more. But until you're at that point, until you're at that level, 1%, that is where it needs to be. You are learning. There is no other job. Guys, you come in here and you think that you can learn how to juice the market overnight. But yet, there's no job you can go out there today and start without any experience at all, and in a week be a manager, right? Or be the most productive employee out there, right? You have to learn. It's no different with trading. But yet we tend as new traders to come in here and think it is. So it's all in your mind, guys. You got to get over the stuff that you think about trading when you first come in and accept the way that it really is. And once you do that, it becomes a lot easier to make the money that you want to make. By the way, notice I just saw this ascending support here. A breakdown of this support gets interesting. Now, there is a confluence of activity here around this R2 pivot. So, I wouldn't be surprised to see something like this. Oh, that almost gets you that 48 area where we're looking at. I wouldn't be surprised to see something like that. Or, again, as we were talking about, maybe this is a triangle, right? So you get your A, your B, your C, your D, and your E here before you pop off a bit higher there. Now, if the triangle happens here, guys, your target would be the height of this wave B here, because it's going to be a running triangle. So it's this move up. It's basically almost $19,000, and you put that there wherever wave E completes. So if wave E were to complete, I don't know, right here around 50,900, then your target would be 69,661 based on the height of the triangle. It doesn't have to get there, and it could go higher. But again, we talk about guidelines, and so the guideline is the height of the triangle is your pattern target, you know, with Elliott Wave there. So just something to think about with that there. Let me see here. Let me see here. Hey, Vasilis, is that okay? Hopefully I said your name correct there. It says, you mentioned 3 possible scenarios, all of them with the leg down. What if the price continues climbing? Well, if it continues climbing, then we have to really kind of go back in there and look at what this is. I mean, in order for the price to continue climbing from here, and I'm not saying it can't happen, but this would have to be an ABC here. If this is 5 waves down, as it appears here, 1, 2, 3, 4 is a triangle, and 5 here, then necessarily we should be looking for 3 up and then at least 5 more down, because that gives us an ABC. See, this is where Elliott Wave comes in handy, because it lets you know how price action works. So you know that impulse waves are 5 waves, corrective waves are 3 waves. And we know that if the trend is up here, then we need at least an ABC down for a corrective before we get 5 more up. So, like I said, if we're looking at this and counting this here, it does appear to be a 1, 2, 3, 4, 5. In order for this to continue going up, it would have to be an ABC. So how do we deal with that then? Because who knows? Maybe it's wrong, right? Maybe it's an ABC, right? So this is where you start looking at things like invalidation levels. If this is an ABC, I would say that if this is going to be an ABC, I think this would have to be maybe like a I think it would have to be something like an A here, and then maybe an A, a B, and then a C here is maybe some kind of have to be a flat. Maybe an A down here, and then an ABC up for a B here. And then this somehow has to be 5 waves down here. So, you know, see, this is where it gets real messy, because you've got this very large, comparatively for this move down, this triangle here. And there really isn't anything here. I mean, like you got this move here. So 1, 2, 3, and then you have this large triangle. And so when it comes to Elliott Wave, often we talk about the look. And this is one of those things that takes time. But if this is 2 and this is 4, the look isn't there. 4 is very, very large compared to a very tiny 2. And while they should be different, they shouldn't be so significantly different. Now, Bitcoin is more a liquid. It's less liquid than most. And so I kind of give it a little bit of leeway with things like that. So what do you look at? So here's what I would look at. If price gets above this, let's see here. This is the swing high right here at 60,746. If it were to get above that, then I would lean toward potentially being an ABC down and done and heading up. But here's the other thing. Again, Elliott Wave to the rescue here. If we measure out this as a wave 1 and we say it's done with its pullback, you know, we've got the 50% here at 52,373. And we've got the low here. at 53,221, so almost $1,000 higher. Now, that doesn't mean it can't be a wave 2, but remember, again, the guidelines. Usually a wave 2 is at least going to get 50%, but most of the time 61.8 to 70.5. So it didn't even get to where it usually gets to. So that, again, that doesn't mean it can't be a wave 2 completed, but it does mean that until you get proof that it is wave 2 completed, you should be leaning toward it's got further to go. See, so when you trade, there are no guarantees in trade. What you're trying to is amass evidence for support or amass support for your particular idea of what you think's going on. You'll never be, you're going to get people that are going to tell you, oh yeah, it's definitely going to do this or that. If you're following somebody like that, I don't care if they've been right once or twice or 3 times, whatever, get the heck away from them. Because if somebody is out there telling you something is definitely going to happen with price action, that it's definitely going to some certain area, that is, yes, they could potentially, there might be some skill in there that makes them correct more often than not, but the very fact that they guarantee it should tell you all you need to know about that person. You should stay away from that person, because that's a person that either doesn't realize that there are no guarantees in trading, which means they might just be on a hot streak and it happens. And what happens when it doesn't work anymore? Or they know that what I said about, price action not being guaranteed, but they're trying to sell you. They're trying to sell you something. And I'm not saying it's wrong to sell you something, but it's all in how you sell it. I sell you guys something too. But I sell it in a way that I can go to sleep at night. If I were to sit here and go, man, to cherry pick certain easy, what you're going to find online is most of the setups that you see people employ online are easy. People don't sit there and consistently, multiple times a day, work with lower time frames on a specific asset. Because if they did, you would see how often they would be wrong. But they pick the easy ones out there. And they say, oh yeah, well, this one's going to go here. Well, yeah, you've got bullish divergence. You've got, a bounce at a fib. A bounce at a pivot. You've got a rejection at a supply structure, something, right? So it's, it makes it much, much more likely that they're going to be correct. And so they're willing to go out there and say, listen, I guarantee it's going to do this. Well, the odds were with them. There was a higher confidence trade. But if you're new to trading, you don't know that. And you don't know that this is what they're doing. And that becomes dangerous for you, because you're just expecting them to tell you when to buy and sell, when to get in, when to get out, all these things. And if they're wrong, well, what are you doing with your risk management? What if they're gone for a while and price goes completely in the opposite direction for a while, and you're thinking, well, they said it was going to go there, so I'm just going to keep holding. And instead, it just keeps going in the other direction. These are the dangers of just following people online to have them, tell you where to enter and exit and whatnot. Let me see here. What's going on, Bill? Good to see you, man. Let me see here. Let me kind of hear. Let's see here. Hey, Trader XO, man. What's up, buddy? Good to see you here. See, Trader XO trades a specific way that works really well for him, guys. So he's one of the people I've told you, definitely is a good follow. And he's doing real well lately with a lot of the newer projects. I think Dot's one of his favorite, Polkadot. But he's got a few others as well. So if you want somebody who keeps up with all the new stuff and whatnot coming out there, I definitely say follow Trader XO there. But he has a specific way in which he trades that works extremely well for him. Now, here's the other thing, guys. Everybody is different. And the reason why when I do my stuff and I show so many different ways of looking at the charts is because everybody is different. And so for some people, Elliott Wave right away, they're like, yes, that makes sense. For other people, I've taught them, tier 3 members, how to do the supply and demand structures that I do. These are unique to me. This is not the normal supply and demand that you'll find online. But a few of our members, more than a few of our members actually, it really connects with them. I teach pivots because for some people, pivots make a lot of sense. the idea, the one thing I want you guys to understand, again, is something I've already said, is there is no one thing that works better than everything else consistently all the time. They all work. They all, if done properly, they all get you to the same place. It's just you have to figure out which way does your brain work? What makes the most sense to you? And a lot of that has to do with your time frames that you have for trading, your risk levels, all these things. So that's why it's so important. Why I always talk about figuring out who you are as a trader or investor, because it's important. If you can figure that out, it sets you well ahead of where you could be, because you start paying attention to the things that you need to pay attention to, not what somebody else tells you need to pay attention to. All right. Let me see here. Armin, what's going on, man? Good to see you checking in, buddy. Let me see here. Spellerman, did I say that correctly? Good to see you checking in. Is it okay to start to learn with a small sum of money, a couple of $100? Sure. But it's also okay to learn with a large sum of money. The important thing in either case is strong risk management. That is the key. I'm going to tell you what right now, guys. You want to know what differentiates the successful new trader from the unsuccessful one? In other words, the one that continues to stick around a year later versus the one who's out within 90 days? Proper risk management. I tell you time and time again, risk management is where you make your money. I cannot stress this enough. You can come in and you could start off without knowing a thing about the markets with $1 million capital account and be just fine if you use proper risk management. Or you can come in with $100. But in either case, you still have to use proper risk management. If you don't, it's worse than just scratching off a lottery ticket. And you all know those are a waste of time, right? Let me see here. Telluride, what's up, man? Oh yeah, he's mentioning, Telluride's mentioning that Femix. If you can use Femix, guys, it does have a your spot trades, like he says, $69 for a year, and that's as many spot trades as you want to make. You could make 10 spot trades a day of any amount, and that $69 a year covers you there. Or I think you can pay monthly like $8.99 or $9.99 a month. But if you're a frequent spot trader, something like that is a great thing because it saves you capital. You don't have to pay all these outrageous fees that you often have to pay on other exchanges, every time you trade. So definitely something to think about there. Now, if you want to use Femix swaps, they're perpetual swaps, you've got to pay the normal fees that are associated with those. Every entry and exit out of that. But if you just want to trade spot, man, that's the way to do it is with that monthly or yearly thing on there. If you're with us in Discord and you're interested in that, get my attention there in Discord and let me know, and I'll give you a link that we have. And yet small kickback we get, but again, all that money that comes from that goes into being able to provide more for you guys there on Discord. So yeah. Is that Niles or is that Niels? What's going on, man? Good to see you here. I hopefully said your name correctly one of those two ways. VGet says, I tried so high to lose it all, but in the end it doesn't even matter. Sounds like it might be song lyrics. Let me see here. Let me see. Zeus, good day to you, sir. Good to see you here. Let me see here. Let me see here. Can I explain this? L-Man says, can you explain the psychology in setting stop loss in profit lower time frame on leverage trading? I'm sorry, let me try to understand what you're saying here. Can you explain the psychology in setting a stop loss in profit on lower time frames when trading leverage? Okay, so just stop losses in general, guys, in profit. The first thing you have to understand if you're trading is that nobody ever lost money taking profit. Think about what I just said there. Nobody ever lost money taking profit. The other thing to understand is, if you don't take profit when you're in profit, when are you going to take it? Now, all those two things mean are, if you're closing out a trade in profit, you made money. That was a successful trade. The problem with many traders, especially new, is that they get upset if price continues on without them. So here's the thing, guys. Excuse me. Let's say this is price doing this, right? And so you take profit right here. And let's say you entered, excuse me, right down here, right? So you entered here and you took profit here. You have, this is a winning trade. Okay? That's profit. But you get upset because then price does this. And all of a sudden you concentrate on this right here rather than this right here. But here's the thing. At this point right here, remember, there are no guarantees in trading. And whatever level you're at, you took that profit there for a reason. And so you didn't know that price was going to continue up higher. Right? You didn't know that. So you locked in your profit. You guaranteed that no matter what price does, you made profit. Price could have, instead of going up there, it could have done this here. At this point, when you took profit, you didn't know if it was going to do this or if it was going to do this. But what you do know is that no matter what it does, you made profit. Rinse and repeat. Move on to the next trade. The biggest problem that I have seen that new traders have, and traders, again, in general, is that they sit here and they concern themselves so much with what ifs. Stop with the freaking what ifs, guys. You're killing yourselves. You're killing yourselves when it comes to trading. You're worrying about things you don't have any control over. If you're in profit and you take profit, that's what you have control over. If you did it, you did it. You can't lose money taking profits. Again, if you're in profit and you don't take profit, when are you going to take profit? You have to absolutely do it. So that's the first thing. Now, there are specific techniques that you can use when you're doing it. I taught one for Tier 3. Right back toward the beginning when we started to do our weekly Tier 3 training. A manual stop loss, a manual trailing stop loss. Oh, excuse me. Sorry about that. And I taught them how to actually intelligently keep a trailing stop loss in case you're not sure where that top may be and you want to keep riding with this. Now, I'm not going to teach you all that here. You're going to have to join us for that. That's a Tier 3 membership thing. But, that is in the archives of all the trading education there, guys. That over 60 hours of education we have. Yeah, and you can find it quick and easy. It's labeled. But I think the most important thing when it comes to stop losses, if in profit, is just to recognize that as long as you exit in profit, you have a successful trade. Stop listening to the yahoos online that say, oh, you're an idiot if you're selling now or whatever. They're the same people that tell you to buy the dip every $1,000 it's dropping. They're the same people who tell you right here, buy the dip, 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 buy the dip. Look, I was right. Oh, man, it's going down. Buy the dip. Look, I'm right. Buy the dip. Look, I'm right. You got to... Social media, or not social media so much. Social media is... I'm not a big fan of social media, guys. It tends to bring out the worst in people more than anything else. But the advent of global internet and this access to information is a two-sided sword. One, it gives you so much more information at your fingertips for free than I ever had when I first started, almost 26 years ago now. The flip side of that is most of that information that you see is wrong, or at least half wrong. It's half truths or outright lies. And as a new trader, unfortunately, you don't know you don't know enough to know what is or isn't. So you have to go in there and try it until it doesn't work out and find out for yourself, oh, that's not correct there, or they didn't really know what they were talking about. So double-edged sword there, because within that, there's still that really good information that you get out there for free or cheap or, a little bit paid or whatever. But the problem is, especially when it's free, you don't know what's legitimate and what's not. And most of what's free out there is not 100% legitimate. And sometimes it leaves out very important things that you have to know if you're going to do it. So yeah, when it comes to profit, guys, as long as you are taking profit, you are winning. If you can consistently lock in profit, you're winning. When you keep concerning yourself about, oh, I missed the extra bit of move it did, well, at that point, you're paying attention to the wrong thing. Here's the best thing. When you take profit here, you can get into the next trade. If this goes on here, and then you see it going up here, and it comes back and it retests, and then it starts going up above that swing high there again, there's another entry for you. Take it. You don't have to miss out on the rest of the run there. But again, the problem is most traders are brand new. They have no idea what they're doing anyway. And so they're scared to take profit because then they have to figure out how to enter again. And that's scary if you don't know what you're doing. So get out there and learn what you need to learn, guys. A lot of people are like, oh no, there's all this stuff is free, so I don't want to have to pay somebody. You know what, guys? In my life, I could never have gotten to the position I am in right now, not just in trading, but anything else, if I hadn't paid somebody better than me to teach me how to do it. And I use that with everything I do in life. Why do you think people who want to excel in, math or science or something, or they want to excel in football or soccer or baseball, or, all these things, or they want to excel as a guitarist or something? Why do you think they pay tutors and they pay mentors to help them? Because you're going to get there a lot quicker if you have that. But people are starting to say, oh, it's free, so nobody should be charging. Oh, you're a terrible person if you charge. No. I've spent, me, myself, I've spent 26 years getting to where I'm at. I know a lot of the pitfalls. A lot that you're not going to know until you go through it. A couple of times, usually. Do you want to have a quicker trip getting to where you're getting? Then pay somebody like me. It doesn't even have to be me. It's just somebody like me. Somebody who's got the experience to help you not make the same mistakes, or at least to help you notice where those are going to be. And, if you still make the mistakes, that's on you. But, kind of telling you, listen, you don't want to do A, B, or C. You want to do D. So, again, I say this because a lot of the misgivings you have as new traders are things that you can easily change. But you choose to stick with those misgivings, those misunderstandings, and think you're doing it right. And in the end, you're just losing money that you don't have to lose. That's real talk, guys. That's the way it is. Let me see here. Train says, yeah, sometimes they say things like, imagine not buying this dip, or do you hate money? Talking about the people who are telling you to buy the dip every time it pushes down, right? And, again, it depends. Buying the dip depends on your age and your time frame. It's not for everybody. Blindly buying the dip or dollar cost averaging in may not be the best thing for you if you're in your 40s or 50s or older. If the market is near a top and you're in that age bracket, and you're buying there, you have to wait till it cracks down and then comes all the way back up just to get even again. That could be years and years and years. If you're in your 20s, that's not a problem. That's not a problem. Dollar cost averaging is smart the younger you are. The older you get, the more you have to pay attention to where the market actually is. Last thing you want to do is dollar cost average at the top of a market. Then you're just buying all the way down. So yeah, you're lowering your cost overall, but you're continuing to have to buy all the way down. And then the question becomes, if the markets drop because the economy's going off the cliff, how much money do you actually have to do that? Do you have a job that's definitely going to be there? Are you going to lose your job on the way? And so you end up maybe buying the dip, dollar cost averaging up in the top 20%, and you don't have money to do it as it continues all the way down. So maybe it takes 5 years to get back up there. Now you're 5 years older, and it's just now getting to where you entered back then. Or maybe it's longer, or maybe it never gets back up there. These are very real things that people have to, think about that most people don't. Budman, what's up, man? He says, I still remember what basically Hank and Chris said back in 2018. If you want to hope, take most of your profits first, then you can hope him. Yeah. One of the great things about trading is you can make it a point to work to you can take profits until you get back all the money you initially put in. At that point, everything you have in the market it's not costing you a penny. It's money, you took out everything that you put in. And so it's all free money now. And there's a certain freeing feeling with that. It's pretty significant, guys. All of a sudden, you don't feel like you have to trade every little dip. This is something many times that new traders feel like. They feel like they have to trade every one. You have to short, long, short, long, short, long, short, long, short, long. No, that's why you lose all your money. That'll drive you nuts. You should be zooming out at least to the 4 hour, potentially the daily, if you're a new trader. A lot less noise, a lot bigger movements, a lot less chance to get it wrong. The smaller your time frame, the more likely you're going to get it wrong more often. Which means even with real good risk management, you're still losing more money than you should. More money than you need to. Let me see here. Thank you guys for saying bless you. Yeah, sometimes, again, allergies. I don't get sick, but them allergies really suck. Data. Oh, yeah, man. Sorry, buddy. I forgot to mention to everybody. Yeah, daylight savings time this weekend. The dumbest thing we still do today. If there's one thing I would want the government to really kind of work on right now, it'd be daylight savings time, getting rid of it. I don't think they don't have it in Arizona and Illinois. We got it everywhere else, and it's just so stupid. What a waste, really. Anyway, let's kind of jump on here a bit real quick. Let's see here. DXY continuing its move up here. And so as I've tried to tell you guys over and over again, if the dollar's rising, that puts a lot of really strong downward price pressure on assets that are, or instruments that are denominated in dollars. Because again, the stronger your dollar gets, the more it's worth, right? The more valuable it is. And so the more valuable it is, the less of them it takes to buy a thing. So the value of things denominated in the dollar are necessarily going to decline, right? Y'all understand that from an inflationary point. You know that if more dollars are coming out there and being spent and circulating around, more dollars coming in, makes the dollar worth less, right? And so the value of a thing then, moves accordingly. But it's the opposite if the value of the dollar is going up. If you've got more dollars out there to chase price is going to go up. The value of a thing is going to go up. If the value of the dollars are more expensive, they're worth more, then it doesn't take as many of them to get that same effect, so the value of the thing drops. So yeah. For a retail noob, if price continues upwards without knowing what will happen next, when should you re-enter? Is that too much for right now? I have to look up entries and exits too. The simplest thing there is to look for retest of support and resistance. So, like this right here. This area right here. Continues going up, pulls back, retest this area here, and then bounces up. The strong move off this right here tells you that that's a good reaction there. Probably go long is probably okay. what's better is to wait for an advance above the previous swing high. Now, it may pull back and, push up through and pull back and then push up through. But nonetheless, and nothing's ever guaranteed. But generally, again, you look for the bounces off the, if price is going up, you look for it to pull back to a previous area of congestion and to get a rally off that. There's your first clue. If it gets above that previous swing high, there's added confidence. Now, again, in this case, it pulls back and then pushes back up. This happens sometimes when price goes around and around, right? But look what happened right here. So coming down, same idea, coming down, right? Comes down here, creates this congestion, comes down, pushes back into it, rejects down. Swing low is right there, continues down. So there's your short right there. I mean, you can get in short here, but it could get rejected here and come back. If you wait till it gets through that previous resistance or support, it increases the odds that it's going to continue down, and it did there a bit. But, again, that's the simplest way to do it. And that's the basics of Elliott Wave. It's just that Elliott Wave tells you, listen, you're going to look for, depending on if it's a wave 1, 3, or 5, or 2, or 4, what kind of, reversal you're looking for, where you're looking for it. Scroll all the way to the bottom here. Let me catch up with you guys again. Cody says Powell's going to wreck the market tomorrow no matter what he says. Yeah, we kind of talked about this in Discord a bit the other day. I guess it was yesterday. At the end of the day, guys, there's two ways that the Fed can approach what's happening. They can do QE or they can do twist. These are the two things that they've done over the years now, right? QE is more aggressive. All right. QE is pure asset inflation. It's creation of new money that doesn't actually find its way into the markets. Though, again, we talked about primary dealers and how, the money basically goes to the primary dealers who then buy securities, right? Stephen Van Meter, if you guys are listening to him, look him up. Metre is his last name. Great guy, discusses a lot with bonds, okay? He did a video yesterday, I believe it was. So if you find him on Twitter, go to yesterday's video or on YouTube. Stephen with a V. Van Meter, Metre. And where was I going with this? He did a great thing talking about banks and how, and all this kind of stuff and primary dealers, and then even expanded beyond that with a lot of good things with gold and whatnot. So if you sometimes are not following exactly what I'm saying, that video is a good one as far as to get you out there. But basically they have QE, which is asset inflation, and it's monetary creation. But, most of that money, of course, with QE goes into the vault, can't be touched legally. The rest of it that goes out there is they subvert the idea that the Fed can't directly inject money into the economy kind of idea to buy corporate debt, right? And so with QE, basically the best way to think about it is that QE has a set limit of dollars that they're going to spend. Once they spend it, it's basically done, right? So twist is different than that. They basically have an unlimited amount of buying that they're going to do at a certain price level, okay? But the reason why it's called twist is because what they're doing is they're selling shorter term government securities and then using that money that they make from that to buy longer term securities. And so what that does is it relieves the pressure on the front end of the yield curve and puts it toward the back end. The idea is then it makes it more, like I said, it takes the pressure off that front end of the yield curve. And, yields and rates are inverse. Now, the problem with twist is that it's not as aggressive as QE. Now, this is interesting because if twist is not as aggressive as QE, and they're worried about deflation, because with twist, you're not actually printing new dollars at all. Again, you're using the proceeds from short-term securities to buy longer-term securities, okay? So that does nothing really, I can't say nothing, but it really doesn't have a whole big effect on increasing inflation, which is what they're trying to do. Also, it doesn't do much at all for unemployment. QE is supposed to work with the unemployment to provide, to get the market going so that employment increases. But twist doesn't actually do that. So the Fed out there talking about what they're talking about lately, saying, oh, well, we've had this robust return back to jobs, but we're still below pre-pandemic, still well above pre-pandemic levels. So we have to continue working on that. How do they do that if they implement twist? But QE isn't doing the thing it needs to do, and you've got bonds doing what they're doing. And so the idea is you've got to work, as long as they continue to say, hey, listen, we're not going to go to NIRP, negative interest rate program, which is what the Fed's been saying. They say they refuse to go zero interest or below. So if they don't, they're limited in what they think that they can do. I say think that they can do because, again, I don't believe that the Fed really has control over, ultimately over the trend of what's going on. Like the news events that we look at in the charts, those news events give knee-jerk reactions to price action, but they don't affect the overall trend. I think it's the same way. I believe it's the same way with the Fed. The Fed can create knee-jerk reactions within the greater, monetary regime and what's going on economically, macroeconomic-wise, with the populace and whatnot, but it can't actually change what's going on. Remember, the Fed is, I've talked about this before, the Fed is reactionary. And so, we kind of get to that point, well, is there anything they can really do? And I don't think there's anything they can really do. I think Powell says something tomorrow, the markets get a little volatile again, but at the end of the day, it doesn't change ultimately what's going on with this big thing, which again, I believe is this ending of this credit bubble. So, that's kind of where we're at with it. There's so many moving parts when you look at macroeconomics and you look at these things. Again, you go from simple things like interest rates to more complex ideas like QE and twist and, the yield curve, front end versus back end, real rates, all these things, all this is all kind of coming together in this way. And so it makes it a lot more difficult than what you're going to get from most people out there shouting, oh, money printer goes burr. That's such a lazy take on it. And it's so completely wrong when it comes to QE. But yet, what is the most prominent thing you see online? Oh, look, the government printed all this money. It's inflationary. We're going to make, It just shows that people don't really understand what they're talking about online. So remember that thing I said earlier about all that information, all that free information online? But most of it is half-truths or outright lies. And most of the time, those outright lies, the people that are spreading them don't even know they're lies. So, there's a lot more in that when you're looking at it. I saw Raoul Paul do I saw him do a Real Vision. I think it was the end of last week. He did a video. It should be free out there on YouTube. But he talked about, the complexities of a little bit. He kind of mentioned the complexities of macroeconomics, kind of like what I just said there. All the moving parts and everything and how that affects. But when it comes to, Bitcoin, I want to remind y'all, I know there's a lot of hype out there. I know everybody's excited about that. And I'm excited about the possibilities as well. But you absolutely have to be aware that Bitcoin has never faced a downturn in the economy. It's never been around when there's been a recession or a depression. That's the first thing. So if you blindly say, oh, it's got to go up to $1 million, whatever, and everybody's going to blah, 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 and you negate the fact that you have never seen it in that kind of environment, you're asking to lose money. We can all hope that it's going to do well, but realistically, it doesn't make any sense that it would. That doesn't mean it can't, but it means historically, it's this risky. I would say the riskiest of all assets out there, but then NFTs are there now. But it's extremely risky, and in a depression or recession, you have a risk-off environment. So this isn't me saying that it can't do well, guys. This is me saying, listen, you got to get your head on straight. Because most of the people out there aren't even talking about it. It's not even Raul's talking about this. So that same interview, that same thing I was talking about for Real Vision there, he was really kind of just extolling the virtues of Bitcoin and how he's irresponsibly long it and everything. But what is going on with Bitcoin at the moment is seen in two phases. It's seen at the beginning of a market, of a speculative market that becomes something eventually. But it's also seen at the top of bubbles. And when we zoom out to the overall economic, whatnot that's going on, if we have this strong recession, potentially depression coming in, and Bitcoin's bouncing around here, gyrating, shaking its hips here, getting your attention at the top of this bubble, of this larger macroeconomic bubble, that's not a good sign. And so that's my caution. And very few that listen to me get that, because what they hear is, oh, you're such a bear. Oh, you think it's going down. It's not going anywhere. And there's not a lot I can do about that. But this is the reality of what we're doing right now, guys. So you shouldn't be more into Bitcoin than what you can afford to lose. Now, I do give you that he says, okay, he goes into all of a sudden a whole bunch of covering his rear end with what he says. Because he says, listen, you got to make sure you understand the market and how much you've got at risk and what the potential is for the future and not, and all these things. But he's right on that. You absolutely have to. And too many of y'all are well deeper into Bitcoin than you should be with what you have. Because here's the thing, if the economy goes off a cliff, many of y'all are going to lose your jobs. And you might not be able to get one for a while. That's the reality of what happens in an economic downturn, in a recession. And heaven forbid it gets to a depression. So, again, less money to come in to buy Bitcoin and stuff, much more of it going to sell because people trying to get out. Because who the heck wants to be in the riskiest asset when the rest of everything else is going to hell, right? You don't want to be in a risky asset when that happens, generally. So we'll see what happens with it. But, again, guys, I'm not here to tell you what you want to hear. I'm not here to cheerlead you. I'm not here to say rah, rah, Bitcoin, diamond hands, laser eyes, all this stupid stuff out there. Because it all is emotional talk. That emotional talk is what loses you money in the end of the day. You can be up right now and be doing great. And my God, if that hits, you're going to continue holding, think it's going to keep going up. Now, my thought is, if we do get something like that, it'll drop down pretty well. And then we'll have a good buying opportunity. But we'll see what happens when it gets down there. Again, we've only known Bitcoin in this bubble phase at the beginning of speculation, at the end of this bull market that we've been in for decades. We don't know if it's going to exist afterward. I think it will. I've got hopes that it will, which is why I'm in it. But don't for a second think that means that I'm just going to be blindly holding until it all goes to zero or something. And I'm not saying it's going to go to zero. But I'm saying if somebody's out there guaranteeing you it won't, you're an idiot for listening to them. And I mean that with the most love possible. This is straight talk, guys. This is what the people you follow online aren't going to tell you. But it's probably some of the most important stuff you'll hear. Everybody talks about Bitcoin being, to kill the dollar, Ethereum to kill the dollar, all this stuff. Wouldn't it be poetic if the dollar kills them both? I'm not saying that's going to happen. But with such unbridled enthusiasm and excessive money just being thrown into these riskiest of things out there, it's something worth thinking about. Now, that doesn't mean you can't continue to ride it up and make money along the way. I think a lot of y'all missed that. Everything I'm talking about here may or may not happen. I don't think Bitcoin's going to, to disappear entirely. I'm looking at, if we do have what I think is going to happen, I'm looking at a great opportunity to really, really load up at very low prices. But as it goes down there, and I'll short it all the way down. And as it goes down there, we'll continue to keep a watch on what's going on with governments and whatnot to see if anything comes out that might make it not worth buying at that point. Because governments get kind of silly when you get into large recessions and into depressions. Everybody here in the U.S., I don't know how it goes in y'all's countries, but here in the U.S., they often make fun of what they call lame duck Congress. Congress that sits around and doesn't do much. Doesn't really pass any laws, doesn't pass a lot of laws. I'm thinking, that's a good thing. You shouldn't be wanting your government to create more and more laws. But when things like recessions and especially depressions come in, Congress gets busy. All of a sudden, you can't do much of anything. And if you're going to do something, you have to do it exactly in the way they say you need to do it. So really something to think about there. Let me see here. Let me kind of catch up with you guys here. This thing just keeps flowing on here. Let me see. Mark says Canadian taxes April 30th. Likely not a huge market mover, though. Let's see here. Hey, let's do me a favor. Let's not shill things in here, guys. I don't think you guys will ever really hear me talk about shilling some project or something. It's not what I do. You can get that everywhere else online. But I don't do that here. Common Man, what's going on, buddy? He says, you're not a bear, you're a realist. You're not one of those guys in his early 20s drunk on moon juice. I appreciate that some people get that, man. I'm 46. 46? Yeah. I think I'm 46. That should be it. Once you get above 30, what are years anyway? It's just another year, right? Just glad to make it to the next one. But yeah, so I've been through, again, I've been doing this for almost 26 years now. So I've been through multiple bear markets and in other markets, equities and whatnot along the way. That's why when I say things like I talk about what's going on with the way that retail is acting online with social media here and why, it screams top or topping. I don't want to say it screams like top is right now, but it usually screams you that a top is forming. And, because Bitcoin is so illiquid, that could stretch further. It makes larger moves. But, then again, the stock market's continuing to push as well, which that in and of it, if we look at all those metrics that we look at that go well beyond what we saw in 2008, 2001, 87, the 70s, 1929, all these metrics are well beyond those. And so it really kind of screams, everything bubble, the credit bubble. And so how far can it continue to push? We'll find out. But I don't for a second think that we're safe. I think the likelihood is much greater that we're going to have some really significant, God, if not a depression, some really awful, huge recession. It would have to be a depression, though. Rather than, this is the beginning of some bull phase going up. We had the shortest bear market in history, that actually went deeper and further than, faster time than what it did in 2008 and all this kind of stuff. I mean, it just doesn't make a whole lot of sense. And so, often when you've been around, the markets for a few decades, things that don't make sense mean that something is going on, something wrong, something that is not as bullish as the new entrance here in the last year would want you to think it is. But again, that's the difference between experience and not having that experience. And I realize there are people with experience that also think, hey, this is a new bull run and everything too. But again, just because somebody has money and they do well, maybe in a bull market, some of these guys haven't even done well in the last 10 years. You can look at things, guys. Look at things like Sailor. We've talked about it before. And over the last 10, 11 years, his company has done absolutely nothing. It's gone straight across. All his competitors flying through the roof. He's lost market share out the rear end over the last 10 years. The only reason his stock went up here is because he bought Bitcoin. Now, you guys sit here and you evangelize somebody like that, but is that really what you think you should be doing? Does it really make a lot of sense? If he was somebody who was doing well, I could understand that. But he was one of the highest flyers during, the dot-com bubble, and he was one of the worst losers that actually survived. He lost all 99% value. And his company moved up, and then it's gone in QE asset inflation for the last 10 years. His stock did nothing. Nothing. Everybody else, all his competitors shot up well above him. He did nothing. There's got to be something to that, guys. You got to get out of just listening to somebody because they tell you what you want to hear. It really sets you up to lose a lot. Oh, the glasses are already here. I need to get them, man. They're packed away somewhere now with this move. So, yeah. Excuse me. Let me see here. Yeah, there's another idea. The 1,400, the stimulus checks. Now, I see a lot of people talking about how much money they expect to come in, but remember, this stimulus is different from previous stimulus bills. The way in which it was put in, the previous ones, it could not be garnished. Now, the way that they put this in, I can't remember exactly what they put it in under, but it can be garnished. So if you are already subject to garnishment of your wages and money and whatnot, you're probably not going to get your whole 1,400. Seriously. It'll get taken out. So how much money is really there to put into the markets? And I'm not necessarily believing that everybody's just going to put it in there. I think a lot of people are going to pay down debt, or they're going to save. I think that's going to be the bigger thing. I don't think we're going to see that rush of money into the market from it. But, I could be wrong. But, the first thing is definitely real is of that money, first of all, not everybody's going to get 1,400. There are levels there. You have to, make below a certain amount. And there are, and those that do get it, they might not get the full 1,400 because they make to the higher end of the range. So, there's all that to think about as well. Have I ever listened to Su talk about Bitcoin Supercycle? I have not. You'd have to let me know about that for sure. Be interested to see that. Bill says once you get over 55, time goes backwards. Let's see here. So yeah, Bill, when I talked about the QE money, this is U.S. law. This is money that goes, the part of the QE money that goes into the Fed vault cannot be touched. It can't be sent out to do other things. Yeah, no, it's U.S. law. It can't go out. Again, the idea of that is that it's used for reserves for banks to make loans, buy securities, stuff like that. Remember, the government, guys, when we talk about primary dealers and banks and stuff like that, the government's looking for these guys to buy the securities. So they send out the money via QE, and it comes back to them because then the prime dealers and banks will overspend it on the securities. Stephen Van Meter did, when he was I talked about that video. I can't remember if that one or a different one. He's done a few videos lately on banks, I think. But during one of them that I saw there, he was going into much more depth about this, about SLPs and stuff like that. If you guys are interested in how QE really works and where money is really going and stuff like that, man, you guys need to watch him, man. He's got a great bit of information on there. I keep saying I want to do this. I don't have the time. Day in and day out, I never end up having the time to do it. But I would definitely suggest that you read what he's writing and kind of watch his videos there. They give you a great in-depth look at bonds and banks and QE and primary dealers and stuff like that. Cybercole says, I'm not rich and I didn't get the stimulus check. It just got sent out, first wave. So, I know they're going to have like another wave coming out next month or something, or by the end of this month or something. So don't give up yet. Oh, and a lot of banks. There's another thing Stephen touched on was the reason why some people are not going to get their stimmy checks until tomorrow, till after the Fed speak. So watch that as well. I've got friends, that are supposed to get their money, and they're not going to get it until, end of this week or whatever. Or, after tomorrow. Tomorrow's Wednesday, yeah. So, watch that. It's pretty interesting. If you look at it, it has to do again with how banks are graded and stuff like that, and what those deposits mean to those banks. I keep telling you guys, everything is about the bank. Are they making loans? Do they have money on deposit? There are laws and levels and things that they have to keep with all that. No, not at all, Oscar. No, and here's the thing. I've been talking about, the what I believe is the incoming crash since 2018. At the end of the day, if you look at the cycle itself, the cycle we're looking at is the one that I'm looking at goes back to 1929. So you've basically got about 91 years of excess that need to be cleaned from the system. So it doesn't happen overnight. These things, it takes a while for it to build and for things to finally tip and go down. So I don't think the fact that he's been talking about it for years, like I said, we're not looking at the same type of things we had in 2008 or even 1987 or the 70s or anything like that. We're looking more along the lines of maybe something along 1929 or, something large prior to that. We're talking about a big cycle cleansing. And so it takes a while. And I think, unfortunately, that's where a lot of new traders get caught up. If it doesn't happen immediately or, soon, then they think, oh, you're wrong kind of thing, rather than understanding what's actually happening. Now, again, I could be wrong, and Stephen could be wrong. Again, macroeconomics is not an easy subject matter. The Fed basically has said that they don't know what they're doing. We talked about that when we talked about the pivot from Bernanke to Powell. And how things changed, and their realization back in here in 19 and 20, when again the thought was when you have low unemployment, interest rates should rise, and yet we had practically record level lows with interest rates and record level lows with unemployment at the same time. So these things aren't definitive. But we look at it and we try to follow the money and we see where's the money actually going and what's actually happening with it. The Fed is going to say what it's going to say. I think the Fed understands that most of what it says isn't true or fully true. But again, the Fed needs to make you believe what they're saying, because what they're saying is intended to make you go take out loans and to overspend and to overconsume, because that gets inflation going. And if you have a debt-based economy, you absolutely have to have inflation. You have to have a bit of inflation. You need to pay for your debt with cheaper dollars. If you're paying it with greater dollars, with more expensive dollars, then your debt is more expensive to pay. And if your debt is more expensive to pay, then you've got less money to spend. So that's not good, right? Again, less money circulating. So less dollars going after things cause prices to drop. And if you get that in tune with a rising dollar, which is already putting downward pressure on prices, all of a sudden you get this potential debt deflation spiral thing that I've talked about before kicking in. Yeah. Yeah, everybody gets totally manic. They do, and they're getting there, with Bitcoin. That doesn't mean it has to be topped out right now. That doesn't mean it can't potentially reach 100 grand. Which is why I say, it's okay to trade Bitcoin while it's going up, but you keep in mind what's going on. Pay attention to your surroundings. What's going on? Things look crazy. They are crazy. There's a reason for that. This is what you want to pay attention to. Lambos are extremely uncomfortable and unreliable. Might as well buy an NFT. Rolls Royce. Oh, geez, I haven't looked at Rolls. I don't think I've looked at Rolls Royce in a long time, if at all. I think I did before. Let me see here. Hey, look at that. Man, I think I looked at that 3/6/2020. What were we looking at back then? Oh, man. Oh, okay, I see what happened here. They had splits and everything. Okay. All right. So splits and then a readjustment with the charts for that split. Now, my first thought, and I hate the patterns, but it does look like there might be something along these lines here kind of printing out. I don't like it. It's kind of ugly. Doesn't really look all that sharp. Let me see here. Yeah, Bitcoin did become a religion for some people. And it is because, again, a lot of new money coming in. And it's so exciting because you can make so much. But without the reality that it could also just be, the canary in the coal mine singling the top. I've said it before. What if this explosiveness by this most risky of assets is just the thing that says, hey, listen, this is the most excessive wealth. You're putting all these real dollars into something that's not physically real. What if that's the thing that says, you know what? That's the top there. I mean, it would make sense, right? If this head and shoulders plays out here, let's see here. We're looking at that neck. Well, we're looking at this neckline right here. And then we'd be looking at about $107.55 above the point of breakout. Let me see here. Volume-wise, I like the expansion of volume coming off the bottom here as we're building this shoulder. I'm not a big fan of this thing here. But I do like the advance of volume on the move out. We're above the daily pivot here. Broke up above it, retested, pushed up through the R1. So that's bullish. Let me see here. I don't think. Let's see here. If that's a wave 3. Wave 1 is taller than it. Wave 3 is taller than it, or 5 is. So this would like it to be like a 1, A, B, C, maybe as a 2 here. This could be a 4, A, B, C. Might be having a triangle go on here. Might have it like a B, C. Doggone, I used the wrong ones again. 1, A, B, C. Let's see here. Maybe like a D and then an E on a pullback here. Maybe. If so, wave D cannot go above wave B here, which is 134.90. That's turned out before then. And E cannot pull back then below wave C here, which is 86.70. But if we get this here and it pulls back here, and then it shoots up through above wave D, your target is going to be the height of wave A here. It's the largest part of the triangle. About $51.50 above where wave E terminates. So, yeah, excuse me. Could potentially be a 1, and then A, B, C as a 2. And this might be a 1, 2, 3, 4, 5 here for 3. Get you a 4 and a 5 going up. And then, of course, the other thing being this inverted head and shoulders pattern potentially here. You got a lot of room here on the weekly. When I talk about higher confidence trades, guys, here you go. Look at this. Excuse me. So you've got this large bit of bullish divergence right here. Man, that's beautiful. That was your signal to buy there. Huge bullish divergence and oversold. That was your key to buy right there. If you really want to be more positive about this, let's get a weekly close above the pivot. But not just a pivot. You want it above this swing high right here. That 146.45. Because, you could close above it and then pull back down. But if you're getting above this swing high, you should be good to go up here toward at least, this 220, 225 area at least. Potentially heading up further on that. Looking at this, you'd have potentially, let me see here. Yeah, that's a pretty deep run there. So you've got basically a 90-somewhat percent retracement on that. See, it went way down here. And this looks like it's probably a 1, 2, and then a 1, 2, 3, 4, 5. Usually a 3, 4, and a 5. And then this would be maybe a 1, 2, 3, 4, 5, and then A, B, C. But my only problem with that is then this looks like a 1, 2. I'll say this is a 3 and a 4, but I guess maybe you can get a 3, a 4, and a 5 out of that. Yeah, I definitely think you want to get above this swing high to really start feeling positive about it, I think. Above that 121. Is it 121.40? 146.45? Let me see. Something quicker here. Yeah, 146.45. There are some gaps here that need to be filled, or that will likely be filled. Right here at around 164.70 and 223.40. But yeah, I think you definitely want to see this get above that weekly pivot and then above that swing high. And then you can look at least up here at about that 220, 225 area there. This target on this head and shoulders here, it's right there around 238. So that takes you right there above that, just above that S1 or that R1 pivot there on the weekly. So I think it's probably a pretty good target. Let me see here. On rolls, depending on where you draw that downward facing line, the price has already broken it. I don't think there's anywhere else that you draw it. This would be it. If this is a head and shoulders here, this is the left shoulder, this is the head, and then this is the either a double shoulder here, or just this is all part of the shoulder here. As it does this. Of course, the triangle, is a good shoulder there as well coming out. But yeah, I don't know where else you draw that line. You don't draw it anywhere else if this is a head and shoulders. That's the proper placement of the line there. So there's that. Maybe you're talking about this line right here, though. Yeah, maybe you're talking about that line right there, right? And like I said, that would potentially be, actually, you'd probably want to draw it more like this, the triangle. So this right here. Then, you've got this going on right here. There's a triangle there, yeah. But, let me see. So, yeah, I mean, the possibility there, you do have this gap here, which is intriguing. And, the pattern target on this potential head and shoulders here is up there where we'd be looking for that R1 pivot on the weekly. Let me see here. My only other thing, see, this can't be a 1, 2, 3, 4, 5 as we saw though. So we'd really have to kind of zoom in here a bit and try and figure out what this is here. Yeah, see, if I look at this, to me, this has got to be a 1. And you have an A, B, C as A, and then A, B, C as B. 1, 2, 3, 4, 5 is C. So there's your 2. And then we just get it up here. There'd be your 3. And this is your 4 playing out in here. Oh, man, I didn't even notice this is even deeper down. So this A is actually further over here, as you can see. Moves up and then comes back. And then A, B, C is B. A, B, C is C. A, B, or 1, 2, 3, 4, 5. Maybe A, B, and then getting your C up here. 4 hours topped out, Stoke RSI. You've got bearish, let me see here. No, you don't. No bearish divergence there. But nonetheless, topped out over there. So it looks like it should be pulling back as an ABC to finish off E there. So, yeah. Oh, the RACI chart. Excuse me. Let's see here. RACI, not RACI. There we go. Oh, let me see here. Yeah, so if I look at this, oh man, I hate charts that have all this white space in them, all these gappings. The volume's picking up down here. We can see if we look at the volume up here. 13 million, 17, 20 million, whatever. Prior to here, obviously a lot less, which is why you have all these larger gaps in between here. Let me see here. Let me zoom into a weekly. There we go. So again, same basic idea. You've got bullish divergence. You've got an A, B, C potentially here. Though I think I don't know. I mean, this This looks like it wants to be a leading diagonal right here, just by shape. So that would beat you a 1 and a 2, and then a 3 and a 4, and then a... Let's see, what is this here? So let's see, maybe like this, 2, 3, 4, 5 maybe. So 1, 2, and then 1, 2, 3, 4, 5 gives you 3, 4. You can't do that because you can't have this overlapping here if you've got overlapping here. You can't have a leading diagonal and an ending diagonal. So potentially 1, 2, 1, 2, 3, 4, 5 gives you 3, 4, and then 1, 2, 3, 4, 5 here. So yeah, so I guess it's probably your ending diagonal down here. It would seem to be. Something like that. But you know, again, you've got this this bullish divergence here, as you can see, kind of on the weekly here. First point and then second point there. Weekly's kind of hard with that Stochh RSI. My first thought is you definitely want to get above, minimally above this descending resistance. You definitely want to get there. See here. Yeah, so the first thing you have to do, obviously, is it has to overcome this descending resistance. If you can do that, your next target should be the pivot. If you can get above that, then you need to get above this swing high. I mean, that's how you do it. So you've got your points here. You've got to get above the... got to get the breakout of this line. Probably come back and retest. Probably hit this and pull back. Probably hit this and pull back. Go like that. Maybe some along this line here, I think, is how it would have to play out if it's going to. But those are your levels. You got to get through this descending resistance. Then you got to get through the weekly pivot. And then you got to get through this swing high here at $5.22. That's how I'd play that. There's your bigger picture there. If you can break out of that that channel there, man, it looks like that should give you a target of about $11.06 or $11.07 above the point of breakout, which takes you right about here, which is where you should expect to get. If this is the bottom here, 5 waves up should take you around where this previous high was. So that's what you would be expecting there. I guess this would probably have to be like a 1, 2, 3, 4. See where the swing. Let me see if it beats this. Swing low at 1.352. $1.32. So this is a new low here. So here's the thing. This is an all-time low right here. It's dipped below this over here. So generally, when you're getting a new low, you're expecting 5 waves down, not 3. And this looks like a 1, 2. This would be a 3, maybe get a 4, and then you have 5 for lower down. I wouldn't be surprised. I mean, I think it's got some upside here, maybe, you know, to kind of get up there. to get like a larger wave 4 here. But yeah, you definitely kind of want to watch this area right here around $4.30, $4.40. Right here, I could see, I could definitely potentially see like a 1, 2, 3, 4, 5, and then up. So yeah, I think you watch those levels I was talking about. This thing might have further to go before it actually gets up there. Because again, dropping below that swing low over there, you should have 5 waves down. And if I look at this, 1, 2, 3, 4, 5 gives us 1. ABC gives us 2. 1, 2, 1, 2, 3, 4, 5, 3, 4, 5 gives us 3. ABC up would give us 4. And then we'd have 5 dipping down below. So I think this might have a little bit further to go overall. Like I said, when we first got here to the weekly, Stoke RSI is just about topped out and oversold and overbought. I can see it getting just enough bounce and dropping down. It's not going to drop down to negative, but, you know, dropping down in there. Which, if it drops down, you know, you could see them split, which will give it, you know, again, give it higher value there. So kind of pull it up and change it up a little bit. But I've only got 3 down, and it's dropped below that low over there. So that new low suggests there should be 5 down still. No worries, man. Yeah, I got curious with it. You know, again, looking through it, I got curious with it. But anyway, I do need to get out of here, guys. You know, as always, I really appreciate you guys checking in. We'll do this again on Friday at 11 a.m. Central Standard Time. So, you know, definitely, you know, whether you agree with Stephen Van Meter or not, he does speak pretty clearly. He does give a lot of information on how things work. You know, with a lot that you may not know if you're not a macroeconomist, when you're looking at, again, going into QE and you're looking at primary dealers and SLP and all this other stuff with banks and you know, and how the money actually moves around there. You know, these things that I tell you and I don't really have a lot of time to go in depth about. And I keep saying I'm going to make a video and then I don't. Luckily, he makes the video, so we don't have to worry about it. I can just send you guys there. But even if you don't agree with his overall, what he thinks is going to happen, become accustomed to, understanding to the way that the money does travel throughout that instead, because it's very complex, all this in and out and trying to figure it out. If you're looking at, you know, at the government's balance sheet and all these other things, like I said, Santiago Fund, Colorado Travis, they're also great to follow, because they're not going to give you the raw Bitcoin is going to the moon and you're an idiot for not buying it, you're small-brained or whatever. You know, they talk about the other things that you should be paying attention to. You know, how do these other things work? Because these other things can have a strong impact on. Now, I'm not saying Raul is an idiot or anything, but he may be more emotionally into Bitcoin than he is willing to admit. You know, again, when I watched his latest video, I agree with a lot of it, but some of the words he uses, some of the inflections, some of the way in which he speaks about Bitcoin appears to be very emotional. And so, you know, again, I'm not saying that I'm going to be correct and Bitcoin can't do well or whatever, but, you know, you've got to pay attention. You've got to be aware of how these other things work, because Bitcoin doesn't live in a vacuum, guys. Bitcoin is part of this. Like it or not, what you guys wanted, you know, if you've been around a bit, this is what you wanted. It's part of the big macro talk now. You got your big guys getting involved, but just because they're getting involved doesn't mean they won't leave. And if they leave, it doesn't mean they won't lose money. These big guys lose money too. but they will cut ties. They won't go to zero. They won't lose 50% if they can help it of their value. And so all this money coming in that's boosted the price all of a sudden becomes money that's available to use as supply. It becomes Bitcoin that's available to use as supply. And you just have to be aware of it, guys. I'm not trying to rain on your parade. I'm not trying to make you feel scared or anything like that. But, I keep telling you guys, these are real markets. You guys are using real money that you had to expend some sort of effort. You had to go to school. You had to work a job. You had to do these things. So your money that you're putting in the markets is your time that you spent to make that money that you're putting into these markets. Treat it like that. Don't treat it like a scratch-off ticket. You shouldn't be buying those anyway. House always wins. You hope you're going to get lucky? Come on. You can do better. You can do better things with $2, $10, $50, whatever scratch-offs each week. If you guys want to get to the positions that you want to get to in terms of wealth, you have to start thinking beyond the way that you already think. Nobody else is going to do it for you. If the only way you can envision yourself getting wealthy is by luck, then you're not doing it right. Learn. Put some work into it, guys. You can do this. Anyway, I'm done there, guys. So I hope you guys have a great day, as always. If it hasn't been used yet, I haven't had a check yet, but don't forget that coupon there that we had to get for the annual Tier 3 membership. We only had 3 of them, so if you go in there to use it and it says it's not available, it's gone. But the coupon's right there. You just put that in the coupon code area. And if you do that and it works, your average price for a year is going to be $84 a month, which is well below half of the $199 a month we usually charge. But there's only 3 there. So hopefully I'll see you guys over in Discord. If not, hopefully I will see you then on Friday as we take another look at the markets and discuss this whole thing a little bit more. I appreciate you guys for checking in as always. I hope you guys have a fantastic day. Y'all trade safe and you stay safe out there. And you know what? Everything else aside, guys, please work the most on your risk management. That is, if there is one thing I can tell you that'll give you a greater chance of success than anything else, it's proper risk management. Okay? You guys have a great day. Take care. And remember, the only thing you control in the market is how much you lose. That's it. Take care, everybody.